Well, it's time now for business, and let's begin with a look at how the markets are doing, starting as ever with Wall Street at the close of play. Gains across the board on Thursday. The Dow Jones up almost 1.3%, the S&P 500 up 1.22%, and the Nasdaq up 0.7%, as you can see there. Well, as for Asia this Friday, a similarly positive picture. The Nikkei up just over 2 percentage points, the Shanghai Composite up 1.2%, and the Hong Kong Hang Seng up almost 1 full percentage point. Well, for more on what we're seeing there on the markets, we can bring in markets analyst Rayhan Baysan. Rayhan, thank you so much for being with us today. Take us through the movements we're seeing there.
Good morning. So it was a roller coaster ride in the financial markets this week. The US managed to rebound yesterday towards the end of the week from a 3-day sell-off. And it was the worst 3-day sell-off actually since late October. After the rebound, as you pointed out, we see some positivity in the Asian markets this morning. Yesterday, the Pan-Continental Stocks Europe 600 only lost 0.1%, erasing earlier losses. The investors took refuge in the US dollar, and commodities were also broadly lower. All throughout the week, US inflation fears have been at the center point, and it seems like those fears will not be going anywhere and will be causing much more volatility in the short term.
And Rayhan, fears of US inflation have also been keeping the markets somewhat occupied this week.
Exactly. So consumer prices in the US surged 4.2%, marking the biggest hike in 13 years. And yesterday we also got the producer prices, and it posted their biggest gains since 2010. And as the restrictions ease in the US and the vaccine rollout seems to be successful, a pretty significant increase of spending is expected to continue, and which will surely cause further pressure on the inflation. And all these signs that inflation may be picking up faster than expected have put investors on edge, thinking that the US Federal Reserve might be forced to unwind its very easy monetary policy sooner than expected. But the Fed uses every opportunity to point out that the surge will be transitory, that more data will be needed to reverse their policies. So actually, it's not about by how much the inflation rises, it's for how long it's going to stay this high. And even though we heard from Fed officials only yesterday that the stimulus would be needed for some time, investors are not convinced and waiting to hear a sign from the Fed when the tightening might start, and that might come maybe in summer, sometime between June and August.
And very briefly, if you can, we're slightly running out of time. What should we be looking out for as the week comes to a close?
Actually, today we'll be following yet another data related to consumer prices. US retail sales will be announced, and it's expected to rise 1% month on month. If we see as it's expected, then we might see a relief rally in the markets. But if it comes stronger or weaker, then we might see the equities tumbling down. And also another important thing from the ECB we'll be hearing is the minutes from the April meeting. And although it's going to be uneventful for the euro, surely it's going to be closely watched to see policymakers if they're willing to make any kind of monetary tightening dialogue in the future. That's it.
Rayhan Baysan, thank you very much indeed for your insights today.